Zambia's central bank leaving its main lending rate at 9.25%. That, of course, steady. Inflation is likely to moderate in May because of improved maize harvest, rather. For an assessment on the growth of the economy right now, I'm joined on the line by Yusuf Dodia, the chairman of the Zambian Private Sector Development Association. Yusuf, thanks so much for joining us today. So we've got a lending rate steady at 9.25%. The fourth time, in fact, we've seen this no change stance from the central bank. What's your sense from the private sector's view right now as to kind of the accommodative stance when it comes to monetary policy? Do you think that lending rates are at low enough levels to support economic growth?
Oh, absolutely. Zambia runs an inflation rate of about 7% per annum, and it's quite clear that the policy rate set by the Bank of Zambia cannot be below 7%. For them to be looking at a policy rate of 9.25%, that's 2.5% above inflation, which is quite reasonable. Right now, the effective lending rates, interest rates in our commercial banks stand at around 16%, which is still fairly high. But as far as I'm concerned, it's the amount of effective and active competition that will take place in the banking industry that is likely to bring those interest rates down. But definitely we could do with lower interest rates if we're going to compete favorably within the SADC and COMESA economic region.
Now, if you talk about changes to the banking sector and creating a more effective banking sector, there have been a lot of regulatory changes, the latest being the Bank of Zambia Amendment Bill. Just talk us through how that changes the role that the Bank of Zambia now plays in the financial sector.
Yes, actually, while the bill was in Parliament, it was very alarming because the bill was framed in such a way that the central bank, the Bank of Zambia, would then have powers that would allow it to regulate and monitor the movement of foreign currency and local currency inside and outside Zambia. And in addition to that, there was a clause that was giving the Bank of Zambia power to set maximum interest rates within the banking sector, within the commercial banks. But after a lot of debate within Parliament and with the private sector, the government then settled on passing the bill with removing the word regulate. So the only word that's in that act now is the word monitor, that the central bank will monitor the movement of foreign currency, and the clause on setting maximum interest rates was actually removed. So I think that we do have a relationship with the central bank that is still in favor of promoting private sector and not stifling private sector growth. And I think that the rollout of the impact of this particular act is something that we need to see.
Well, obviously, that's certainly something we are tracking right now. But just lastly, before I let you go, because there are a number of issues that we need to just delve into when it comes to Zambia, Yusuf, let's talk about Zambia Railways and the issues that they've been recently around the mismanagement of those funds that they got, in fact, through the raising of that $750 million Euro bond last year. Where does the company, the state-owned organization, stand right now when it comes to those borrowed funds? And is there confidence that with the CEO and the board having been dissolved as a result of issues around those funds and how they were used, that they'll be able to get the infrastructure drive back on track?
Well, I think we do have a problem with Zambian Railways. When we look at that 750 million euro bond that was issued last year, quite a substantial amount of it has been allocated to the electricity supply company, which has a huge menu of investments that they would like to finance in terms of new hydroelectric power stations, additional transmission lines to different parts of the country. So they really have no problem in being able to spend the money and spend it in such a way that we have infrastructure that will actually promote economic activity across the country, which should result in higher taxes and the ability for the country to pay back the bond. But when I look at Zambia Railways, they were allocated $120 million, and the wrangle that's been going on is really about administrative expenses. By administrative expenses, I mean the CEO wanted a salary of in excess of $500,000 per year, and the cost of his accommodation in Zambia was somewhere in the region of about $10,000 to $12,000 a month. And for a company that is really not performing, that sorely needs the investment to go into rolling stock and upgrade of the railway network itself, that doesn't seem to be the kind of management that is going to bring positive results. So I think that at the end of the day, yes, the board has been dissolved and the CEO has been suspended. What we hope to see is that the government is going to float this job in the local press and also in the national press, so that we can actually employ somebody who's got a great track record that can turn the railway systems around in Zambia. And hopefully, through that mechanism, we'll also be able to get a board in place that will actually interview the new CEO and employ a CEO that will be answerable to the board. And that, I believe, is the way forward, and I hope that's the way we're going to go.
Yes, so certainly something I'm sure those Eurobond investors would hope to see as well. Thank you so much for joining us today. Appreciate your time and certainly an update on things that are taking place in Zambia right now. Yusuf Dodia, Chairman of the Zambian Private Sector Development Association.